Welcome to the show. It is a late one here in Spain. It's now around 11:15 p.m. at night, but I wanted to make sure I checked in with you guys. So here I am. I hope you're having a wonderful Friday. Let me know where you're tuning in from and what your plans are for the weekend, because I just want to know what you guys are up to. I just want to connect with you guys, know more about you, and I feel like we have our own little family going here. So I hope you're having a fantastic day. My name is Megan Nelson, aka Crypto Megan, and I am going to jump right into it on this one. And I wanted to explain a little bit behind the title. It is not clickbait when I say they are lying to you. And what I mean by they are lying to you is big institutions and people getting involved in Bitcoin that are spinning the narratives in their favor. And it's been happening for years and years and years. I mean, we'll start with JP Morgan and Jamie Dimon. It's just about 4 years ago where he was about to fire any one of his employees that even so much as touched crypto. And then they came out and said that they were going to ban it again from their company. Then they turned around and said it was their second most preferred asset to invest in next to real estate. The other day, Jamie Dimon said if he were the government, he would shut down crypto. And now we have all these institutions offering Bitcoin ETFs. So what I mean by this is you have to take what all the people are saying on the news with a grain of salt. And I really hope you're able to tune out the noise. The reason why the Blackrock ETF and all of the ETFs, the Bitcoin ETFs, are so monumental is what I've been saying on all my streams. It essentially plugs Bitcoin into Wall Street, like what Michael Saylor has said a lot. I like that analogy. It plugs Bitcoin into Wall Street, a 6-lane superhighway to where they get to have access to Bitcoin at the click of a button. It's not necessarily the best way at all to hold Bitcoin or have access to it, but it allows for people to invest in it that fits within a regulatory framework. These guidelines and kind of like the infrastructure has taken 30 years to build, and they're not going to build a whole new infrastructure for one new asset, although they should. So today we're going to kind of go over what the institutions have been saying in the past versus today. And we're going to have a look again at the Bitcoin chart to see where we are, as we are having a cooling off period now. Some people are worried. I sense a lot of fear out there, and a lot of people are saying, you see, this is the top, this is it. I mean, this was just the other scenario that I went over in my stream yesterday, and actually it was the healthy scenario. However, we didn't look like we were totally finished with this move yet. So I'm going to go over all of where we are now and where I think we'll be headed at the end of this live stream, and also just one coin that I think is absolutely set to destroy these markets. It wasn't in my stream yesterday. It is one that stands in a league of its own. So stay tuned to the end. And one last thing, I'm going to show you how you can win $5,000 midstream by minting your address on the blockchain. So let's jump right into it. So here we have Cathie Woods doubling down on her predictions. Suddenly now, again, they're coming out with this right after the Bitcoin ETF has been approved. And as we've seen, all of the institutions are slashing their rates, fighting tooth and nail to get those customers money in. So of course, they're incentivized to come out and have these mega bullish predictions. I just want you to stay level-headed. And as I said yesterday, don't be chasing those green candles. This has got to cool off. It's going to come down. And it did happen to come down today. Sometimes it takes a few weeks, but now we're already getting better entries. So we just got to stay cool, calm, and collected, and we're going to crush it in this market. Let's start off with Cathie Woods, what she's saying about doubling down on her last prediction. As you can see here, updated 2030 Bitcoin price prediction. Cathie Woods, CEO of ARK Invest, bear case 250,000, base case 600,000, and bull case 1.5 million. If this is true, if we hit the bull case of 1.5 million by 2030, I mean, it's literally 6 years away from now. If you were just to take that money, set it aside, and forget it, and you knew that in your retirement you'd have somewhere around any of these figures, not retirement, but in your savings, and then you multiply that out based on whatever your allocation is or your wealth. I mean, this is a no-brainer. This is kind of like not financial advice, but nearly guaranteed success. Because this thing is either going to work or it isn't. And it's proven that it's working. So there's only one direction, in my opinion, that this could trend. And it's a very short time to wait compared to traditional financial markets. So let's hear what Cathie has to say.
our base case is in the $600,000 range. Our bull case, and we think the probability of the bull case has increased with this SEC approval. This is a green light. Our bull case is...
You talked about Bitcoin being worth something on the order of $500,000, literally in only a couple of years from now. Do you stand by that? How does this ETF change that, speed that up, slow it down? What do you think?
Yes. So you'll find in our big ideas, so that's at arc-invest.com, the building blocks for our price forecast. And our base case is in the $600,000 range. Our bull case, and we think the probability of the bull case has increased with this SEC approval. This is a green light. Our bull case is $1.5 million by 2030. You can see the building blocks. You can see how conservative we are in terms of those building blocks. This is a big idea. It is the first global, decentralized, digital, rules-based, critical there, rules-based monetary system in history. It is a very big idea.
Wow. All right. So I love it. I love it. Regardless of whether they're doing this in their own self-interest to promote their fund and to promote people's money coming into Bitcoin, it's only good for all of us. It's good for the entire space. So that's fine. We know why they're doing it. They have their own interests behind it. They want people to invest in their funds, but it's also good for getting the knowledge out there and kind of the idea out there in general to normal people who may not ever have had exposure to Bitcoin or haven't come across it previously. So it's pretty cool. It's pretty cool to see. And the fact that she says she's more bullish than ever now after the Bitcoin ETF, allowing people to access this, it is a big idea. And what I find interesting is that each institution or each kind of like major player like Tim Draper has their own agenda and their own reasons for why they get there. And the fact that she says it's conservative is even crazier. This $1.5 million outlook is conservative. That's pretty cool. But I would agree. And as Tim Draper said on my podcast, it's that light switch moment where everything changes, and that could happen in a number of ways. One is because people are panicking because the banks are shutting down and their dollar is becoming worthless. And the other is because of what Bitcoin represents, also in the face of inflation and in light of what's happening in the world. But yes, they're all kind of coinciding, but each person has kind of like their own light that they shed on it. And I think it's cool. I think it's cool to go down and break down the actual possibilities of how this could happen, because it's very hard for us as humans to understand the possibilities here. I put something up on my Instagram the other day, on my stories. Let's see if it's still there, about how, here it is. I wish I'd kept my 1,700 Bitcoin at 6 cents instead of selling them at 30 cents. Now they're $8. It's hard for our human brains to comprehend the power of something to grow this much. It just doesn't seem real. And so what I think is cool about what Cathie Woods is doing and ARK Invest and all the people who are putting out these predictions is when they actually break it down with numbers and, allocations from different institutions that would have to hit to reach those numbers to make it plausible. Because it is, and we have to think outside the box and we have to think big and zoom out. So next up, I want to go back and take you back and show you why I say they're lying to you. Don't trust them. Trust your own analysis and trust your own view and your own conviction about where this is going. Here is something I want to show you that I put together about Blackrock and their evolution through the years.
Long ago, in 2017, Blackrock saw Bitcoin as simply an index for money laundering. Then in 2018, they came out and said that absolutely none of their clients were looking to invest in Bitcoin. Since then, Blackrock has drastically changed its tone.
We are hearing from clients around the world about the need for crypto. The rally today is about a flight to quality.
So they change their tune often based on what's happening in the market and what their interests are. But our tune never changes on this channel. I am bullish forever and ever. And that doesn't mean that I think the price will always go up in a straight line forever. It means I believe in this technology. I believe in what it stands for. And I believe in the financial freedom we could gain by investing at these levels. It's all important. It's all so, so important. And we have the chance to do this right again, to, make generational wealth in yet another cycle. Here we are. It's not that guy that sold his Bitcoin at 30 cents was wishing he held till $8 or whatever. It's a little bit higher, but it's another opportunity, and we've got to seize these opportunities. So here we have Larry Fink talking about something really interesting. The institutions have now started promoting Bitcoin. It's almost surreal to see after all these years. Bitcoin is no different than what gold represented over thousands of years, an asset that protects you. Unlike gold, where we manufacture new gold, we're almost at the ceiling of amount of Bitcoin that will be printed. So, when he was asked in 2017, do you think any of your clients are thinking about investing in crypto? He said, nope. I think no one is thinking about investing in crypto. Not one person. I mean, it's not realistic, guys. It's just not realistic. And that's why you can't go with what you see in the news. And even though it's fun and awesome that they're all promoting Bitcoin, it is surreal and it's cool, you got to stick to your guns and just stay level-headed. But let's have a look at what good old Larry Fink had to say. When Blackrock speaks, the world listens. They have $10 trillion under assets. So let's check this out.
I believe it goes up if the world is more frightened, if people have fearful of geopolitical risk, they're fearful of their own risk. It's no different than what gold represented over thousands of years. It is a asset class that protects you. Right. And unlike gold, where we manufacture new gold, we're almost at the ceiling of the amount of Bitcoin that we created.
When you hear somebody like Cathie Wood,
yes,
who was on our broadcast yesterday, say that her base case is that this turns into a $600,000 a Bitcoin valuation, base case, and a million plus in a super optimistic case. Are you anywhere in her realm?
I haven't thought about it. To me, that what we are trying to do is offer an instrument that can store wealth. I think if it gets that even close to that high, gold will represent even a bigger value. And let's be clear: if you think it's digital gold, there's going to be a reference point between gold and Bitcoin.
Well, that's a first. Having a major CEO of a massive fund like Larry Fink, the biggest in the world, basically the guy who controls the world, saying that Bitcoin is an asset that protects you, that's huge. That is huge. I don't care if he's flip-flopped or he says things in his own self-interest. I mean, that is just so big. That's amazing. It's an amazing thing to hear because it validates all of our hard work in this space and the message that we're trying to get across. So, I see it as a good thing and a cool thing that he is stepping up and he's saying that because it is what this asset class is meant to do. It's meant to protect you, give you opportunities, and shield you from the corruption of monetary systems like the dollar that are being devalued and debased and, printed out of thin air. So the last video I want to show you is Kevin O'Leary explaining what he thinks about the Bitcoin ETFs.
SEC greenlights the launch of Bitcoin ETFs. O'Leary Ventures Chairman Kevin O'Leary joins us next with his advice for the average investor.
Kevin, if you're sitting at home, how then do you decide if you want to get in? How then to choose between the 11 spot Bitcoin ETFs that were approved today?
Well, they're almost identical, even though each of the vendors would tell you not. But these are commodities, and there'll be a price to the bottom on fees. And so you want to look at what the fee structure is. It's anywhere from 21 basis points or 0.21% all the way to 1.5%. Now, if you're a purist and you're just holding Bitcoin for the long term as a digital gold, as I am, I would never buy an ETF. Why would I pay these fees? It's completely unnecessary, and they add no value to me. The great news is, in this event, is it shows a march forward on regulation towards cryptocurrencies. In addition, I would hope this re-energizes Congress to look at digital payment systems like tokens around USDC, for example, which is based on the US dollar as a payment system. That has been out there. The Stablecoin Act has been kind of delayed, but now we have this momentous occasion, which is great, but we're way early. We're in the first inning. And regarding 11 of these ETFs, not a chance they all survive. You should be watching AUM, assets under management. Maybe 2 or 3 will win. I would bet that behemoths like Fidelity and Blackrock end up on top because they have massive sales forces. But if institutions don't care about this, they don't care because they would never buy an ETF. They'd never pay the fees. The great news is that it's a signal to them, and particularly sovereign wealth, which I deal with. They like this development. This is a good thing for them to eventually get into crypto, that the SEC has finally approved this.
Does that allow you, as the Norway pension or the Abu Dhabi or the Dubai fund that has never held it, to put on 0.5% or 1 or 1.5% weighting, which would be a tremendous boom to what the price appreciation could look like over the next 2 years? And my guess is, yes, that's going to happen. It's going to happen slowly, not overnight. But then the question becomes, where are they going to hold it? Because no, I would never buy an ETF for Bitcoin. Why would I pay 21 basis points of fees? That's pointless. But if it's adopted by the regulator, that lets me go to an exchange to buy it. And I could hold it as a 1% weighting on an exchange. Now, you continue with this line of thought, you start asking yourself, okay, what exchange would they put it on? You can't put it on Binance because the equity ownership there is now held by, unfortunately, a U.S. felon. And so that's going to have compliance problems with your own compliance department. You can't put it on Coinbase because they're in litigation with the SEC, even though they've allowed for a spot product. So who's next? Where does all of that money go? Close to $1 trillion. Well, that looks like it's going to be M2, which has just been launched last November.
All right, so we have Kevin here, Kevin O'Leary, shamelessly plugging the new exchange he's promoting. So I know that people aren't a big fan of him in this industry after endorsing Sam Bankman-Fried, and I would agree. Lost a lot of respect for him. However, what he is saying about the ETFs, why would anybody pay these basis points to have someone else hold their Bitcoin? I mean, it's like, of course people are going to do this because this gives them, people want things to be easy. I help consult for multi-million-dollar portfolios, and most of the people want things to be easy. They don't want to deal with filling their buy orders, putting in buy limit orders. They just want it to be easy, in line with the law and the regulatory clearances, and to be able to buy it and call it a day and set it and forget it. So, it is monumental. It is monumental, and there will be people willing to pay these fees, big institutions and the ones that need this clarity and this regulatory clarity in order to invest. So next up, I just minted my Propykey at Propykeys.com. I was able to mint my address on the blockchain. So our family Vegas home is now on the blockchain, which is super exciting. And eventually you'll be able to upgrade that to the title deed being on the blockchain and eventually sell the house on the blockchain through that title deed and do it entirely on the blockchain, which is super cool. And this is with PROPY, the company that was behind the first ever home to be sold as an NFT in Florida a couple of years ago. And yeah, you can now mint your address, and address number 1000 to be minted wins $5,000. So get on that. It's only 10 PROPY to mint an address, which is currently about $25. Get on this while you can. Try to be number 1000. I know they're well into the deep hundreds. So it'll be coming up at any time now, and it's a really fun opportunity to be able to take part in the first of its kind movement. It's the beginning of a whole new era, and PROPY is revolutionizing the real estate industry. And so here it is. You connect your wallet at propykeys.com, and you'll be able to mint your address there, and then you'll be able to come to this app afterwards, the D app. And you'll be able to stake it in the future, browse other assets, and then you've got governance, liquidity, and it shows how you can upgrade to different tiers here if you're actually the owner of the home. So there's a lot going on. I'll explain this a little bit deeper in another video, but for right now, don't miss out on your opportunity to win that $5,000 because I'm telling you, we're close. And you can buy the Pro token now on Coinbase, major exchanges like Coinbase, also MEXC. So that's where you could buy that to go ahead and transfer it to your MetaMask or your Coinbase wallet and get in the running to win that $5,000 while making history. So here's the Bitcoin chart. It's just following this parabola idea a little bit. As you can see, Bitcoin has had a sharp correction down from its meteoric rise up to $48,000, which is the 0.78 fib level that I spoke about yesterday with lots of resistance. In fact, I'm not sure we'll make it above and hold support above this level for several months now, based on what the charts are saying, but we're going to monitor this. And here we have some, as Eric Crown calls them, LARP lines. as to what could play out next if we are in that cooling down phase and we are going to trend sideways and downwards for the next 2 to 3 months, possibly through the halving and into spring, what this could look like. And this chart here shows it actually going into the summer, into July, and hitting its double bottom low in July. And that would be around $38,000. So that would be an excellent buy opportunity. It could go even a little bit lower than there on a wick down, but I'm one that tends to think I'm going to fill my orders a little bit higher just to make sure that I get in, because I don't want to risk not being in when it does take off, because when it does take off, it waits for no one. So this is the healthier scenario of the two playing out. If in fact we are going to continue on into our cooling down phase, which, is more probable now than not, as we've passed the point of control at 45,500, where we had a major level support. So let's see what happens with Bitcoin. And we have invalidated this parabola idea, which saw Bitcoin going into the mid 50,000s, as now we have broken below the support level that I'm speaking about at 45,000. So let's see what happens here. Maybe we will go into corrective phase, which would not be a bad thing. And that's a pretty steep sell-off right there. And like I've been saying on this channel many days, we're going to have a massive correction of 20 to 40% at some point. Is this the beginning of that correction? It could be. And according to the stats that I went over yesterday, we didn't make it to the average move, which is around 51 to 52,000. So this is a little bit like of an outlier as far as less than the average. So that is something to note as far as, will we have another push up before continuing this crash down? We'll see. But, nothing to panic about. Things are good. The Bitcoin ETFs have all been approved at once. It's a monumental, historic day in history. And, soak it in. Don't get caught up by the news. Don't get stressed. Don't get fearful. This is all par for the course. And even though the cycles don't repeat, they often rhyme. And we're coming into the halving, where there will be a massive supply shock on top of so much more demand. So I'm expecting fireworks, whether that's now or later in the cycle, or even 2030. My God, let's just, close your eyes, buy a Bitcoin, store it in your cold storage, wake up in 2030 and you'll be a millionaire. You like that? I'm all about keeping things easy in this space. So I'm not sweating these in-between moves. We could be in this massive range now. You know what? It's all good. We are in a bull run and dips are for buying. Not financial advice, just what I'm doing. And finally, to wrap this up, I have all eyes on CHAINLINK now. I think Link is going to be one that the institutions are going to eat up. And here we have Bitcoin rallies are so fun, Sam Altman. And we have Sergey Nazarov, the founder of CHAINLINK, saying, imagine if we could all have invested in Linux, SSL, or HTTP with a token that incentivized their development. Now that would have been fun. Yeah. So CHAINLINK is like the plumber of the internet, and it's going to bridge all the offline data to the online world on chain. And it's necessary. It's very necessary. And it's like the picks and shovels play. Link is a very powerful oracle. I don't see any other competitors that are even close to the robustness of what CHAINLINK can offer. And so I'm loading up on the Link. And look, we're at the crossroads of a really good opportunity with Link now as well. So here we have Link, and this is what I wanted to show you. This massive consolidation period. I remember talking to you guys about this when I first launched my 200 days to having Bitcoin halving initiative back here in October 15th. So it was actually right before, right here. This is when I started talking about CHAINLINK. $7.20, guys. I bought it last cycle for around $3 to $4. And here we are again. And I started talking about it here before its massive rise. And now it shows that we should be having a cooling down period for Link. And if that is so, then you could get another massive opportunity as the measured moves breaking out of this pattern are all the way down to $8. So the question is, will you be buying, or will you be waiting for CHAINLINK to hit that $4 mark again and miss it and then see CHAINLINK take off? This is $100 $100 plus. This is a 3-digit coin for sure. I mean, there's no doubt in my mind that this is a 3-digit coin and beyond. And that's how I'm acting. So again, not financial advice, but I felt like I wanted to be candid with you guys in this episode. And I'll be buying Link on this dip. And now is the time to be creating the strategy of the different coins you're going to scoop up if we continue to go down. That's what I'm doing. And over the weekend, I'm going to make a video on the upcoming trends that I believe can mint millionaires and the top coins I'm looking at within those trends over the weekend. So I hope you have a fantastic Friday night. I'm so glad I got to check in with you, and I'll see you tomorrow.